This is Christopher Lewis taking a look at gold for FX coins. The weekly chart has been somewhat choppy, but slightly positive every time we pull back. Buyers come in. And in fact, you can make the argument for a bit of an ascending triangle, which this time of year is very interesting because there are several things coming at us all in one short amount of time. When I zoom down to the daily chart, you can see this has been a grind basically since the end of spring and through most of the summer, and with summer volumes typically decreasing, and especially this point in the summer, as traders will be away at holiday, it does make a certain amount of sense that maybe we are just grinding. But I would point out that the lows keep getting higher along the way, and therefore we are still very much in an uptrend. And in this environment, one would have to assume that buying the dips continues to be the way forward. From a technical analysis standpoint, the 50-day EMA sits just below current pricing, but the most important and quite frankly interesting level on this chart for me is the $3,500 level. If we can finally get a daily close above that level, I think that opens up a $300 move based on the ascending triangle, the measured move, if you will, opens up $300 to send us to the $3,800 level. Even if we do pull back at this point, and that's very possible, the 50-day EMA, the $3,300 level, and most certainly the $3,200 level all offer potential support levels. There are plenty of external factors out there for gold to rise. The first one, of course, is that the Federal Reserve is likely to be cutting rates later this year, although that's a known quantity. It was just confirmed on Friday that they're at least considering it at the Jackson Hole Symposium speech that Jerome Powell gave. But quite frankly, I think the market sniffed that out quite some time ago. Central banks around the world continue to buy gold, and therefore it's got a little bit of a permanent bid anyway. Plus, there are other reasons gold could go higher. The falling US dollar could drive gold higher, but what happens if the economy tumbles? That could drive gold higher as well, because although initially it would send the US dollar higher, the reality is gold and the US dollar can go higher at the same time. There is no law that says that it has to move opposite of the greenback. All you have to do is look at the 1980s, and you can see almost an entire decade that had seen both rallying. So that and the fact that we have conflict around the world, we'll see. Maybe there's a settlement in Ukraine. That would actually be negative for gold. Perhaps trade tensions continue to expand. That could be positive for gold. On the whole, and taking the average of all of the things moving at the same time, plus the technical analysis, it does favor higher gold prices. And as September starts to get fully moving, you will start to see more volume. And at that point, you could see the move. The next week or two may still remain slow, but you can't argue with the fact that price has been rising.